This first question is going to go to Rob, and then I'm going to ask Hamish if he has any further input. Does an investor need to make a trade-off between responsible investing and performance? Rob?
Yeah, I'm glad you asked that question, and I suppose that's been a concern that investors have had for the last decade. But absolutely not. I mean, the purpose of responsible investing is just saying when you value an asset, that you need to think about environmental, social, and governance impacts, both as a source of risk, but also as a source of opportunity. And there are many examples of where integrating that thinking has saved investors lots of money. Wirecard probably being the most recent example in Europe. And at the same time, it gives you an eye to the future and think about where do the opportunities lie, let's say, in the transition to a carbon neutral world. So whether it's energy, renewable energy, whether it's electric vehicles, all the other technologies, but crucially, without losing the discipline that Hamish talked about, which is how do I value an asset and what's the right price and how do I pay for it? So it's a framework for making better decisions about it.
Thank you. And Hamish, do you have anything to add?
Yeah, I would say it's very important to always look where the ball is headed, not where it's been. And if we think about what the major trends in the world around climate change and technology and everything else, that's where the ball's been. A lot of what it's disrupting is the past, and new climate change and technologies to address climate change are disrupting old industries like coal-fired power generation, traditional car models. So what you really don't want to do, you don't want to have your capital in places that are fundamentally getting disrupted. But then the disruptors, you then have to work out which are the good businesses and the good companies. Just because we know there's going to be a massive amount of money going to renewable energy, that doesn't mean all renewable energies are going to be a good place to have your money. If you look at like the airline industry, if you went back 100 years, you identified there was a huge growth industry there, and you should have got on board. But as Warren Buffett famously said, investors would have been far better off if the Kitty Hawk crashed and we never had an airline industry, because in aggregate it's never made any money. And there will be, in these high growth new industries, there'll be a lot of failures as well, and just will there be in any other business. So then it's about, in responsible investing, it shouldn't be trend investing. This is where the ball's headed. You then have to pick the right businesses. And if you pick the right businesses in these areas and they're good companies, you don't have to sacrifice any returns. But if you just blindly go into it without working out whether they're good businesses with good returns on capital, you could lose a lot of money. So unfortunately, investing takes some skill as well as identifying what the trends are.